Good morning, everyone. Today is Wednesday, January 14th, and today we're going to do some coverage on not a new ETF, an ETF that's been out there, QQA by Invesco. Why? Well, why not, right? People are getting frustrated with their capital going down. So if that's the case, maybe let's look into others that pay a lesser yield and see if what yield can they pay while still maintaining some stable capital. That really is the question. But anyway, before we get into that, let's look at Bitcoin, bro. Bitcoin, bro. What a freaking day yesterday, man. Oh yeah. So we went from what, 91 yesterday? And then we came up as high as, what's the peak? 95. I don't think we hit 96. But yeah, we're still at 95, which is really good. Thank you for confirming audio. But yeah, so anyway, let's get to the review. Again, today we're going to review Invesco, one of their ETFs. They have a few ETF high income products. So this is their website. They're a gigantic company. If you're wondering how big they are, there's BlackRock, there's Vanguard, there's State Street, and then there's Invesco when it comes to the ETF providers. Invesco, total assets, $814 billion, which, and then Charles Schwab, 300 billion behind them to give you an idea in the ETF space. So that's pretty crazy. So anyway, if you go to the Invesco website, obviously all products, you can see ETFs. There's so much that they offer, but we're here today for high income ETFs for the most part. So that's, I believe, under ETFs and ETPs, you would click Seek Income, and then you scroll down here, and then you find the QQA, right? Here it is. And then they have a few others, but we're not going to talk about the others today. Today, we're going to talk about QQA. What the heck is QQA? QQA is Income Advantage ETF. That's the name, right? That's what we're going by. Okay, simple enough. So what is special about them? Well, number one, check this out. You don't see this often. Again, when something pays a yield of around 10% or more, typically you're going to see a big expense. But again, they're a big company. They can afford to pay a lower expense ratio. All right. So 0.29% versus 0.99% in the space. Yeah, I'd say that pretty much matters, right? So what is their yield? Right here, we're showing about 8, but further down, I think we have 10 for the overall year, but we'll get into that. Let's go to some facts and information here. So the value of the fund is 515 million. I did want to show you that. So if you actually click on Invesco through stockanalysis.com, you could see the size of it. It's 515 million. But look at their biggest fund, QQQ, of course, 412 billion. So look how far down this fund is to them. Like this fund, it almost like doesn't even matter. Look at it, 550. Oh my God, it's crazy how big this company is. But again, they offer a lot of other, SPHD. You guys may be familiar with, but quite a few other funds. QQQM as well. I'm not, I'll have to look into that one day, but I don't believe it's an income fund anyway. But again, QQQ, $412 billion in assets. That's nuts. Anyway, let's continue. What do we got here? Inception date, it did come out on July of not even last year, the year before that. So this has been out for quite some time, but people maybe been snoozing on it. I don't know, but obviously not 515 million. That's no joke. All right, so let's keep going. We'll look at the performance later on. Here are their holdings. So obviously you think of the NASDAQ, you think of the Qs. Yeah, you're going to pretty much hold similar items. So we'll get into the holdings too in a sec. And then we go down here. I think they had Yeah, they had the yield somewhere down here. But anyway, here's their distribution schedule. The last distribution was what, 45 cents, then 44 before that, 45, 45, 44, 43. So their payment has gone up, right? From, this is from what, March? So from 40 cents in March to 45 in December. So something like that is good to see, right? Everyone loves dividend growth investing, but they don't love it when they're getting paid like 2%, right? It's like, bro, 2%, and then you get a 10% increase. Like, what? It's 2 point, it's still nothing. So when you start out getting paid, 10% or whatever this yield is, and you're getting growth, and then here it is, distribution rate 10.24%. Now, some may still say that's too high. Like, there's no way they can maintain their capital and pay you out 10% a year. But again, we'll see. We'll check the numbers, but I think it's manageable, especially with the Qs. It's doable. It depends on the market, of course. We all know that anyway. And then obviously you go here to documents, which we're going to look at the prospectus. But obviously, if you wanted to download it yourself, here's where you go. All right. Anyway, so here's the prospectus. I'll try to not put you all to sleep. I highlighted the important facts and information. But again, here it is, updated February 28th, 2025. QQA. Here it is. So it's got its own little prospectus. It's not combined with, they have, again, two others that I think it's the lineup per se. So we'll go here. Again, you have to go from obviously left, then to right. So here it is, 0.29%. That's great. We know that. The fund, here's the investment objective: investing in a portfolio of U.S. equity securities designed to track the performance before fees, expenses of the NASDAQ 100. Okay. Utilizes an option-based income strategy implemented through equity-linked notes with exposure to either the index or ETFs tracking the index. Now, again, here we go. Another term, another thing to worry about. What the hell's an ELN, right? Equity-linked note. So I pulled it up. I Googled it. Here is Investopedia's definition. It's an investment product that combines fixed income investment with additional potential returns that are tied to the performance of the equities. Again, there's all different bits of information here. But, and it kind of goes into it a little on the prospectus, but it's kind of an agreement to get a certain return, with another provider, essentially. So I don't know. To me, it sounds like a swap, but it's not. But I'm not going to waste too much time on talking about equity linked notes. But yeah, it's just another thing that it could limit your upside potential, basically, because you're asking for income and you're forfeiting possibly a little upside. That's basically in a nutshell. That's how I'm understanding it. But anyway, let's keep going. Obviously, they're holding treasury bills, money market funds, great, whatever. All right, the fund is designed to generate income while providing some downside protection in the event of a broad equity market downturn, and also providing some equity market upside participation exposure. All right, so some downside protection, some upside participation, some. All right. Portfolio managers seek to construct the fund's equity portfolio utilizing a passive investment strategy that seeks to track the performance of the index as close. All right, we like to see this as closely as possible. So we want to follow the NASDAQ, the QQQ, as closely as possible, right? Right. Anyway, let's keep going. What else? I highlight a lot up here. I try not to highlight too much, but there's a lot of information in this part. The NASDAQ compiles, maintains, and calculates the index, which includes securities of the 100 of the largest domestic and international non-financial companies listed on the NASDAQ stock market, blah, blah, blah. Okay, we all know that, right? For the most part, the portfolio manager seeks to construct the options-based income component of the fund's portfolio by investing up to 10% of the fund's net assets in high-income short-term ELNs, with a focus on downside protection. They mention that a lot, which is good. Well, they know that's a concern to people, right? Let's continue in green. The ELNs in which the fund seeks to invest are hybrid derivative type instruments that are specifically designed to combine characteristics of investing in one or more underlying equity securities or an index of equity securities and a related equity derivative such as a put or call option, blah, blah, in a single note form issued by financial institutions. So there it is. So this is something you essentially get from a financial institution. The options within the ELNs in which the funds invest will be based on the index or on ETFs that replicate the index, and such options will generally have a covered call and or cash secured put strategies embedded within them. Okay, so from what I saw, and we'll pull up the holdings, is you don't actually see the trades. Like, you don't see the covered call, the puts. I believe that's done by the other financial institution that you're in this, quote unquote agreement with the note. But it seems like that is what they're utilizing. When the fund purchases an ELN from the issuing counterparty, the fund is generally entitled to receive a premium. Here it is, generated by options positions within the ELN. Therefore, the ELNs are intended to provide reoccurring cash flow to the fund based on the premiums received from selling options. So again, where does it say? The counterparty, the financial institution, whatever the heck you want to call them, they're doing the options. They're going to provide you the premium, which, Invesco, they'll provide Invesco the premium, and they're going to pay you out. They're going to pay us out at some point. So they're not doing the options. They're basically saying, here you go. Give me a 10% income and, do what you want. And there's some type of agreement, which now that I think about it, I wonder if we can get a copy of that agreement. When the fund sells call options within an ELN, it receives a premium, but limits its opportunity to profit from an increase in the market value of an either underlying benchmark. Yeah. All right. So we know that, right? When you sell covered calls, when you do options, yeah, you're limited on the upside. Duh. The maximum potential gain on the call option. Yeah. So I'm not going to read through this. I did highlight it in case you guys care, because as always, I will save this prospectus in my Discord Prospectus channel. All right. Let's keep going. Because these premiums can partially offset losses incurred by the fund's equity portfolio, the fund's investments in ELNs may reduce the fund's volatility relative to the index while providing limited downside protection against declines. All right. So I'm not sure if they're calling the premiums received the downside protection, because again, obviously that could offset, any downside in the ETF, because the premiums received, you're counting that as total return on, the actual ETF price. Now, and and gains and whatnot. The portion of the portfolio maintained in cash and cash equivalents is aimed at providing additional downside. So they're saying like cash is downside protection because you're not in the market. You don't have the market risk, which, okay, fine, whatever. The fund can invest in other derivative instruments, including, see, I saw this part. This was interesting. Including futures and options contracts. The fund can use futures and options contracts, including equity index and ETF futures and options, to gain exposure to the broad market in connection with managing cash balances. So again, that's good that they have that in there so they can try other things. Here on this page, I'm not saying it's not important. It just talks about the various risks of, investing in this ETF. So obviously, if you don't know the risks, go there, read it if you have time. But yeah, it's a lot of words, but it's pretty good document though. Some documents I've seen look worse. The management of the fund, the investment advisor is Invesco Capital Management LLC. The sub-advisor is Invesco Advisors. Again, they are a gigantic company. So yeah, I mean, they don't need to delegate this to the outside. They have their own peeps to do their trades, to do their thing. Here's some people, but I may, just a heads up, I may have John Borello on the channel soon. I know I kind of took a vacation from interviewing fund managers, but they reached out. Well, they reached out last year. I said, reach out back to me beginning of the year, and they did. So they're persistent too. And that being said, I'm probably going to interview him on a lunch break one day. We'll do it live. Well, if he's up for it, we'll do it live, and we'll talk about QQA in case we have questions about it. But that's why I'm doing the video now too. I want to get familiar with it. I want you guys to get familiar with it, and then we can have some follow-up questions. So here's about the equity linked notes risk. I think this is a pretty important too, right? Because there is risk to the ELN. There's risk on everything. There's risk, there's no free rides, right? Management risk. So here it is, ELNs, which could include management risk, whoever's managing it, market risk, as applicable, foreign securities and currency risk. Okay, yep. ELNs are also subject to certain debt security risks, such as interest rate and credit risks. Okay. And then you go down here further, also subject to counterparty risk, because there is another party involved. So we got to worry about then, which is the risk that the issuer of the ELN will default or become bankrupt. So now you got to worry about another company, going default on you or going bankrupt. Again, something to think about. All right, let's see. But I'm sure they're Invesco is a gigantic company. I'm sure the company that they're involved with is also gigantic, but I don't know. It's a question. Investments in ELNs allow for the enhanced yield, but are subject to limited upside appreciation. Again, as we thought, potential based on movements. Yeah. ELNs may also be less liquid. Oh, no, you didn't. Than more traditional investments, and the fund may be unable to sell ELNs at a desirable time or price. So if they want to get out of it, that's an interesting question. If the fund gets liquidated, if all the investors say, oh my God, I'm selling, I'm running away, are they going to be able to give them their money, or is it locked in ELNs and they can't get the money in time? ELNs have a maturity date, potentially increasing the fund's turnover rate, transaction costs, and tax liability. Investing in ELNs may be more costly. Obviously not. I mean, they're charging us 0.29%, which seems low in the high yield space, to the fund if the fund had invested in underlying securities or indexed directly. Okay. All right. So they're basically saying doing ELNs is more expensive than investing in the fund directly. Duh. All right. Let's keep going. I think that's pretty much it. Oh, wait, here we go. Some information on John Borello. He's a CFA, portfolio manager of the sub-advisor, who has been responsible for the fund since July of 24. But that's when it came out. So again, he's been involved with the fund since it came out. Let's keep going up in her. What else we got going on? Again, just a typical prospectus. They actually have this financial highlights section, which I didn't read, and I'm not going to, but it is there. So I'll mention that. And that's pretty much it. So yeah, that's 16 pages. That's not bad. That's not bad, brah. All right, so that's the prospectus. So again, equity link notes, feel fun to read out on that. But again, I did not look at their website to see fund reports, materials, and resources, fund documents. Click this. Where does it take us? Oh yeah, it takes us to this. Yeah, I don't see like what the hell, an ELN document, but maybe we'll hold that and we'll ask that during the interview if we can get them on. So anyway, about the holdings, I don't know if you guys can see this view. Let's see if I can make it any bigger without ruining it. Yeah, probably could shrink this. Okay. All right. So these are the holdings. This is just a download. Obviously, you can download the holdings yourself. And this is how it comes up, right? All right. So great. Whatever. This is the ticker. You'll see all the tickers, the market, the company, the shares, the size percentage, the class of shares, and the market value. But don't worry. I went over here. I did a little, organization, little pivot table action for you. So what is this class of share nonsense? Like, what are they actually holding? Common stock, they're holding 75% in common stock, which we'll get into in a sec. All right. And that's 386 million of the fund. ELNs, they're actually holding only 5%. So that's, it's interesting. That's a very small portion of the fund, $24 million. Money markets, they're holding about 18%, 94 mil. And then there's this American depository receipt. So, okay, whatever. It's a very small position, just over 1%. And these, apparently it's a way to save money on, exchange rates and whatnot to invest in foreign companies. So, all right, that's fine. I don't care for 1% of the portfolio. Now, we do care about 75% of the portfolio. So what is held under the common stock? Well, these are the big ticket items here, right? Apple, well, this is, that's probably a money market fund, I'm guessing. Right? Actually, I probably have to filter that out now that I think about it. Wait, money market funds are what percent of the, 18.48. Yeah, so ignore this sucker. I actually got to take that out. So again, pivot tables on Google Sheets are very easy to use. So what I would do is I'd put the class of shares. If I can move my freaking mouse, sometimes my mouse is not behaving. And I put it under filters. And then you go here, and then basically you check off anything that's not common stock, because that's what we're looking at, common stock only. And then you can X out to the right. All right, enough of the Google Sheets education. So here, 35%, these are 35% of the 70 of the total items there, of the main tickers. Apple is the biggest holding of the common stock, 5.75%. Amazon number 2. Avgo, which is Broadcom. Google twice. So Google overall, 5.57. So they're basically number 2. Meta, Microsoft. Oh, NVIDIA is number 1. Look at that, 6.72. Why is this not sorted by percentage? Whatever. And they got Tesla. Hey, not a bad lineup, right? So how do you feel? How do you feel about this fund? Again, they invest in basically the companies in the NASDAQ 100, and they purchase equity-linked notes with another financial, institution, and they require a yield which limits some of the upside participation. But obviously, they're not doing too much ELN, so they don't have to use, and we could look at too, like what companies are they doing the ELNs on, right? So if we go here, we can uncheck, check, to uncheck, and then we hit OK. And then it's looking like, okay, Wells Fargo, Citigroup, UBS, Citigroup. All right, let's sort by ticker. All right, so Citigroup, Mizuho, Royal Bank, UBS, Wells Fargo. Maybe these are the most volatile, so they can get a decent premium out of them. But obviously, the point I'm getting at is they don't have to do it on, all of the funds, which is good. So they won't be capity doodah, as we all know. All right. Outside of that, again, one thing people will always ask is how does it compare against the competition? So I already pulled that up for you guys. Again, I'm not sure if you could see this in the proper view, but this is the total return comparison for QQA versus QQQY, which is Defiance, versus QYLD, this is Global X, right? Versus QDTE, that is Round Hill, versus QDTY, which is YieldMax, and then versus QQQ, which of course is the underlying. Now, again, when you use stock analysis, when you click max, it'll always go to the newest fund's date. So whenever the newest fund incepted, which it looks like March of 25, it'll do the side-by-side comparison of each of the funds as of that date, again, to make it fair. Now, so if we look at this, we go to the end, right? You could see, again, it's probably tough for you to see here. QQQ is the winner. So again, people talk, does it beat the underlying? No, it did not beat the underlying. So if you're not using the income, should you invest in any of these income products? Probably not. You probably should just hold the Qs, to be honest. But if you're using some of the income, or all of the income, what's your safest bet? Well, if you do a comparison from March of 25, QDTE is at the top. QQA is number 2. All right. And then QQY, QQQY, and then QDTY, and then QYLD. So QYLD, by the way, these are all pretty close. And then QYLD is further down. So they're kind of struggle bus, to be honest. So maybe they need to update their stuff. I don't know if they have in a while. I haven't talked about them in a long time, but it doesn't seem like they're keeping up. So now there's another question out there, right? Because people always will just look at their NAV, their capital, their cost basis. They may just buy a fund, want to get paid, and move on with their lives. They don't want their capital to go down. They want to get paid and want their capital to stay flat. So a way to look at that is price percent, again, because this will keep out the distributions. Obviously, if we just look at the price change from March of 25, of course, the Q, we'll take out the Q because it's not even fair now. Total return, it was fair. All right, so now who would be better? Keep in mind, whoever's towards the top may pay a lesser distribution than the others. In fact, they probably do. So QQA is at the top. So when it comes to capital stableness, they are up 4.83% from March of 25. Everyone else is in the negative. But again, they are paying you a higher yield. So that's why, the price change is gone down. But if you don't care, if you're okay with, say, 10% or greater, right? But the priority for you is the price not going down as much, then QQA is actually probably not a bad idea, right? Again, assuming you could live off 10%. Living off 10% is kind of hard if you're broke ass, right? But yeah, I mean, I don't know. It's just another product from a gigantic company, which, again, and then we can look at dividend growth. I never really look at that, honestly. Looks like they're up there in dividend growth and everyone else is negative. I don't know. I never use this dividend total. Yeah, I don't know. But it looks like, again, they do have dividend growth as well. So capital appreciation and dividend growth. However, the market, has it been good? Well, we had the Qs in there, right? This is total return again. March 25. Yeah, it went down, man. It went, oh, wow. They went down they were down as far as the Qs were down, what, 17.9? Ooh-wee. So what a comeback. So, yeah, man, that is the review. That finalizes the review on QQA, which is, again, an Invesco product. As always, none of this is financial advice. I am not a financial advisor, and this video is for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, then it is what it is, right? Anyway, thank you for watching. But now I'm going to go to, because I know we're live, but the reason I didn't look at any comments, to be honest, is I'm going to post the live version. Obviously, we're posting it now. But then I'm going to post the version of me just reviewing it as a separate video. I'm going to try to start doing that. So it's not like I'm ignoring you guys. Believe me, I saw the comments. But I want to, it's a way to edit out a video from the live, which is simply just the review and keeps out the jibber jabber with us, talking to each other. Make sense? All right. By the way, in about 30 minutes, actually less than 30 minutes, we're going to go live again. We're going to talk about Guestamania. So let me go back and catch up on the comments. Do you guys have any questions? Let's see. There's Eugen. I was just watching last night's video, Eugen. Good to see you back posting. Let's see. Oh, everyone's going to the gym. That's good. Good. Get your asses to the gym. QQQM has monthly options. I'm like, oh, yeah. No, thank you then. Yeah, I don't know why. I don't know what the selling point is of using QQQM. Hey, Double D, what's going on? Double D's got some intro and outro music, guys. Are you ready for it? It's a coming. Good morning. Good morning. Bitcoin's blowing up, baby. It's good stuff. I still have no hearing in my right ear, which is very, very annoying. I'm hoping Friday will be 1 week, so hopefully it's gone by then. Grumpy says, dang, we're on another video in 30 minutes. Yeah, buddy. Yeah, why not? It's good. Can I add? Oh, good point. Good point. Sorry about that. Yeah, because they do pay a higher yield. All right, so yeah, they're up. I mean, just you always gotta click off and click on just to see. All right, so obviously the Q's still at the top, and wow, QQQI is just 1% above QQA. So yeah, they're a great fund, but QDTE is at the top, total return. So it's interesting to see the performance, but I don't know, man. It's tough. It all depends. Like, and you see, it's clear. Like, if you're not using the income, just hold the Qs, right? I mean, if you're using the income to buy other stocks, if you're using the income to live off of, then yeah, sure, income funds are great. But if you're honestly just reinvesting, you can see clearly here that owning the Qs would be a better play. All right. So, we're to that point where we just have to sit back and say, okay, what is our goal? What are we doing? Like, what are we trying to do? What is our goal? What are we trying to do here? All right. All right. Anyway, let's go to the comments. Thank you, brother. Appreciate you being here. Heading to work. Double D. Yeah. I'm not commuting. I commuted yesterday. I'm not doing it again. Can't do it. All right. Any questions? Again, we are live on YouTube and X, and this was just a quick review of QQA, Invesco. And like I said, I may be interviewing John Borello from the company, and we'll just, we'll ask him about it and ask him about his other products, which we didn't even look at, by the way, because they do have other income products. I believe RSPA is the other one, and there's a better page where you can view these. QQQ Innovation Suite Fixed Income. What comes up under fixed income? Yeah, they have like so many different sections to choose from. Close in, yeah. So yeah, I think it's really just seek income, and then you got to find it. There's like an S&P one, I think, but oh, maybe this is it. I don't know. RSPA. And what's the yield if we go further down? %9.2%. Not bad. Again, if we can all find a way to build up a nest egg and be able to live off 10%, sure, it's a good fund. If we can't live off 10%, then struggle bus, right? Struggle bus. And we'll have to figure out other ways to balance it higher. But yeah, man. All right. So let's see if there's any other comments. Man, I woke up late today. They pay about 10% parabolic. Brother says if you're 100% reinvestment, yeah, man, absolutely. Like, unless they're beating the underlying, but again, in the long term, they're not. It's just not. So we say that all. I think like when it's funny, Ambassador and I are on Spaces all the time. We both agree on that, but it's not usually a popular opinion. But it should be. People should kind of understand that. Redfish can live off 10%. Okay, Redfish, do you own QQA? Or do you own any of these Qs? Which one would you choose? Or which one do you choose at the moment? Obviously, some pay higher than 10%, but do you like QQA? I mean, right now, looking at this, the winner is QDTE, but they pay a little higher. So you may, I don't know, you may not want as high as what they're paying. Or even QQQI. I believe they may be paying up to 16% last I looked. TDAC. Oh, TDAC. I didn't pull up TDAC. See? TDAC, what is it? Yeah, so Innovation 100. Okay, so let's click 10-year, and then we'll go back to max. All right, so TDAC launched. All right, so this screws up the launch now. This only goes back to September 25, which now this puts actually QDTY on the top with total return. Then QYLD, then QDTE, then TDAC. So those four have beaten the Qs. Wow. But again, shorter time frame. You have to keep that in mind. So feel free to look at this however you want. But and then the QQQI is on the bottom now. So yeah, different time frame, different things happen. Oh man, that you guys keep giving another one. KQQQ. It's probably the last one I'm doing. The heck are we doing here? KQQQ. No, they're the bottom. Sorry. GP. Oh my God. Fine. This is the last one. I don't even know if it'll fit. Yeah, everyone talks about this one. GPIQ. This is from September. GPIQ. Well, it didn't outperform the Qs, but it's not the bottom. So for what it's worth. But again, this is from September of last year. So take that for what it's worth. All right. I'm done with the comparisons. You guys can go into stockanalysis.com yourselves, and then feel free to, do the comparison. As mentioned before, I am an affiliate of them. So if you are going to use them, use my link. I think it's in the details of this video. All right. Sound good? All right. That's it, man. That's it. I already said not financial advice. Duh. Right. Easy enough. I do have another live stream I'm going to do. It's timed for 6:50, but I could start earlier because I do have to plug in the other amounts. So we could jump over there if you guys want. But yeah, man, hope you guys enjoyed this video. And yeah, let's do a freaking keyword. What's the keyword? Which means, you guys think of a keyword, but the keyword is basically only to prove if you made it this far in the video and you would like to prove it, you got to type this keyword in the freaking comments. So what is the keyword, brah? Is the keyword 10%? Is the keyword Invesco? Is the keyword brah? Is the keyword Parabolic said the Qs? Is that the keyword? Qs? All right. Redfish says yes. All right. So if you made it this far in the video and you would like to prove it to all the suckers out here, all the suckers that watched this 39-minute video and made it, you got to type in the freaking Qs, or the Qs, if you believe freaking is a bad word. Some people do, believe it or not. Not I, but yeah. Anyway, type that in, and that way I know, type, if you're on X, you got to type it in too, by the way, not just YouTube. You got to type it in, and then we know you made it through the video. So congratulations. All right, I'm going to start the next video. Maybe I'll start it with my outro. I'll do it as an intro. Sound good? Get you guys pumped up for Guess the Mania results. All right. Anyway, I'm out of here. Have a great day. Actually, we'll talk in like 2 minutes. Late.